A UIT usually issues redeemable securities or units. This works similarly like a mutual fund. At the investor's request, the sponsor will buy back the investor's units at their net asset value, NAV. Some companies have structured their exchange-traded funds, or ETFs, as UITs. A UIT will make a one-time public offering of a limited set number of units. This is much like what closed-end funds do. However, many UIT sponsors will create a secondary market for the shares. This will let unit holders sell their units back to the sponsor and allow new investors to purchase units. In addition, a UIT will have a definite termination date when the trust will end and dissolve. The sponsor will set this date upon the creation of the UIT. Some UITs may carry on for 50 years before the sponsors terminate them. In the case of a UIT that invests in bonds, the bond's maturity date will be the determination of the termination date. When a UIT terminates, the sponsor will liquidate all remaining investment portfolio securities and distribute the proceeds to the unit holders. Another important aspect of a UIT is that it does not actively trade the securities in its portfolio. What basically happens is that the UIT will buy a generally fixed portfolio of securities. This will be about 5, 10, or 20 stocks or bonds. The fund will then hold these securities with minimal or zero exchange at all throughout the life of the UIT. Because of the fixed composition of the portfolio, investors will know beforehand what they are investing in. The UIT will list its portfolio on its prospectus for the benefit of investors. Similar to other funds, a UIT will have a sponsor for a fund manager. It does not have a board of directors, corporate officers, or investment advisors to provide financial advice during its term. One of the great advantages of the UIT is the ability to distribute interests and dividends to its investors. When the life of the trust ends, investors can receive cash equal to the net asset value of their units. In some cases, they can receive the payment in kind from the investments held by trust. They can also opt to roll the current value of their units into another trust fund, usually at discounted charges. Remember, UITs have a predetermined fixed term. For trusts that invest in equities, the life range is an average of 2 years. And that's it for now. On our website, you can find more posts and podcasts, as well as calculators and other financial tools. Are you investing in UITs? We would love to know your thoughts, so feel free to share them on the comments below. We hope you enjoyed it. Don't forget to subscribe to our podcast channel on YouTube, and we will see you next time.